Hi everyone. Today let's take a look at what BlackRock says we should keep our eyes on for the rest of 2024. Then we'll get into all of the normal daily and weekly charts for all of the major ETFs, indicators, and stocks.
Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started.
So what 4 things does BlackRock have their eyes on? Let's go ahead and take a look. Right now they're looking at AI build-out. No big shocker there. So we're looking at NVDA as well as Taiwan Semiconductor, stocks that are going to continue to do very, very well in this AI build-out environment as we wait to see the effectiveness of AI. Still massive cap spending on AI and the transition, just like we saw similarly here in the information and communication technologies from the 70s to the 2010s, electricity in the 1880s to the 1940s, as well as steam back in the UK from 1760 to 1840. So we've seen these massive build-outs, and this seems to be another major transition. They also mentioned low carbon. I'm not sure how effective that really compares to the AI build, but AI build-out, absolutely massive for sure. And then, of course, we have election-driven pressures, mostly looking at the presidential election right now. Seems like former president and potentially future President Trump is going to win again. So what does that mean? The Federal Reserve might have to keep interest rates higher for longer, likely to be a lot of spending potentially. It depends. President Trump, I think, is a little bit more realistic when it comes to spending and interest rates. He has a little bit more of a business background, but we'll see how it plays. He spent a lot in his last term. Granted, that is COVID, so there was a lot of spending required, but we'll see how it plays. And then debt to GDP ratios. We've seen some of these countries start to slow down a little bit, but it seems like the U.S. is accelerating, so that's definitely a concern. Debt to GDP, not great for the economy. However, that tends to be bullish for markets over the medium to long term. And then infrastructure. So infrastructure spending has been spiking really around the world, but it's also going to continue to ramp here in the United States based on what they're saying here. And you can see what that looks like. Saudi Arabia, massive build, massive investment. Indonesia, India, South Africa, really across the country, we're seeing a lot of major build outs within the G20 population when it comes to construction. So that could be another factor, something worth playing. And then they give some examples: U.S. Infrastructure Development ETF or PAVE, First Trust, Illyrian, U.S. Next Generation, some opportunity there if you're trying to get in on the infrastructure trade. And then we have aging population, right? So we've been talking about this actually several times on the channel, more specifically within China. China has a very old demographic, and it's going to continue to get older, especially with their issues that they had around the One China, One Child policy. So they just do not have the population to replace what they have now. And as these baby boomers also continue to get older, you're going to see spending in healthcare. So how do you play that? Vanguard Healthcare ETF, Japanese Bio, MedTech, iShares, MSCI India ETF, these countries with massive populations. And as they continue to get older, this is going to be an interesting opportunity. So different things to play within healthcare, infrastructure, and then inflation and interest rates. And then, of course, AI infrastructure as a potential opportunity for the rest of 2024. Moving over to the Fear and Greed Index, you can see we finished the week at a 49. A week ago, we were at 54. Looking at that timeline, you can see we peaked up around 63, gave it all back here, and finished basically flat from where we were back on 5 July. So we've had a bit of a turn, momentum into regular greed. We've been in extreme greed for a while. Now we're hovering in regular greed for the past few days. Strength and breadth still sitting in regular fear. Those have rallied, but then they flattened out over the last couple days. The market is still broadening, but we haven't seen that expand too much more. And then put call ratio climbing as you would expect. It was at a very low level. And then volatility here, big spike up into the 17 area. We've been talking about this little rally that we had, broke the SMA there on the 15th, and then we spiked. I do expect that to spike a little bit more over the coming week. And then safe haven demand here, regular fear and extreme greed on junk bond demand. So mixed signals on the bond market. Moving over to the AAII survey. Huge number here on the bull side. Pretty interesting to see that with the big move down that we got this week. This came out on the 17th, so maybe it didn't fully encompass the moves that we saw on the Thursday and Friday of last week. I would expect this to turn down pretty significantly this week, but you can see we were right there at the 52-week high, 52.9 versus 52.7, so pretty close. We did see the bears step up. We talked about that in the previous. Expected a step here. Sure enough, we got it. 21's a very low level for the bears. Neutral, again, getting squeezed well below the average, so still tons of bulls in the market, which to me says we're going to get at least a little bit of a buy up, but I do think that buy up is going to fail, and I'm looking for that lower high setup across markets. Moving over to seasonality, you can see this is a period of sideways choppy, maybe very slightly bullish, but mostly choppy. In a regular year, of course, we are in an election year, so we are looking for a little bit more downside. You could argue that maybe this came early, and now we're going to see a bit of a rally from here. Certainly possible. That could be your lower high setup here. Then we'll see what happens. August is a seasonally weak period. We haven't gotten that calendar yet, but historically that's true. So we'll see how this plays. Could be a peak, dip low, lower high, and then a dip further into that August timeframe. And then looking at the calendar, nothing for Monday, existing home sales Tuesday, bullish supposed to be on the 23rd, durable goods orders and GDP for the 25th, also relatively bullish there. And you can even see in their notes, prone to wild swings, up 16 of the last 22, so historically slightly bullish, but could go either way during this last period of the month, during this last half of the month. And then you do have Michigan consumer sentiment there for Friday, and then just a little bit of a precursor. The week following is the FOMC meeting, where we are still expecting a pause for August. Moving over to the earnings calendar, we have Verizon for Monday. That's pretty much the only one. This is a heavy hitter week. So Tuesday we have Google, as well as Tesla, Visa, Coca-Cola, Texas Instruments, General Electric, Philip Morris, Comcast, yes, Sherman-Williams, General Motors, as well as Invesco. Always fun to watch them. Small company, but it is relevant to the space. And then for Wednesday, we have Qualcomm, Thermo Fisher, IBM, Services Now, NextEra Energy, AT&T, the list goes on, Waste Management, General Dynamics, CME Group, Chipotle. And then for Thursday, you have AbbVie, AstraZeneca, Union Pacific, Honeywell, Northrop Grumman, Valero, interesting oil company there. They've been on a run. Southwest Airlines also coming in there. And then for Friday, pretty light actually, Bristol Myers, Colgate-Palmolive, 3M. 3M's always interesting to watch in that staples space. So lots and lots of heavy hitters, and it is going to push around markets this week. Moving over to the economic calendar. You can see existing home sales, 2-year note auction, fairly interesting. And then looking at Wednesday, S&P Global US Manufacturing PMI, Composite PMI, Services PMI, new home sales, that'll definitely be interesting. And then core durables here for Thursday, core and headline, as well as the GDP numbers. That's really the biggest one for the week. And then Friday, we do get a little bit of inflation data, which is going to be interesting. So core and headline PCE coming out, as well as the Michigan data here. So Fed's favorite inflation data coming out on Friday, and we'll see how that plays going into their FOMC meeting. Moving over to the charts, starting off with the S&Ps here on the weekly chart, you can see the week was down almost 2%, momentum bearish, RSI bearish, so you're expecting at least 1 to 2 more weeks here. You can see last time we got a down week. At the peak here, like we're seeing now, we did have 3 more weeks of downside potential, so would make sense. 21 EMA sitting down at 5280, which would be about a 220 point sell-off from here. 200 SMA, so 21 EMA seems like the zone. Do have a potential for support here around 54.12, probably going to sell to there at least this week. We'll see what happens then. VWAP 53.53, and then another trend sitting down here around 53.12. But really, I'm looking for that 21 EMA over the medium time frame. I don't think this selling is done. Again, maybe we see a wick up early in the week, and then we get more selling, but I'm expecting at least a 2 to 3 week sell-off, which means 1 to 2 more weeks of selling. And then moving over to that daily chart, if we get down into the 5200, that would be the lows back here from the end of May, or this run-up that we saw around that 10 to 12 May time period. So that would be a pretty substantial sell. 528 was that 21 EMA, so that's sitting in the same consolidation back here from mid-May. Again, pretty decent sell-off. If we were to sell down to that 28 area, that would be another 3.5 to 4% lower. And then if we did get into that 52 area, that's another 5% lower. So we're already 2% down. Could be looking at a 5 to 10% sell-off overall from the most recent peaks, which in the grand scheme of things is not terrible, but that would demonstrate a change of structure here. So you've been seeing consistently higher highs. At this point, we're looking at a low, looking for that lower high, and then we'll see if we get that much deeper low. Also have some trend support in this zone around here, around that 53 area. So 5300, sitting in that 535 area. So 535, probably that first zone. You also have the 55 EMA sitting there at 537. Moving over to the Tasty charts, you can see we hit that upper band. Current upper band is sitting at 560.20. Big sell-off candle, 8 EMA sitting at 544.75. Expect to hit that at least this week at the bare minimum. So that would be about a 1% down move from here. And then the ATR trailing stop, 522.26. So if we did test that support level, again, right in that 520 area makes sense. Momentum still technically bullish on the volume weighted MACD, not seeing a ton of volume here on the R vol, so nothing crazy there. 21 EMA sitting at 526.50. That's the same zone that we tested on that 3-week down move that we got here. So you see a similar move right into that 21 and ATR trailing stop zone. So we'll see what happens there. I do think that that's going to be relevant if we get a continuation lower, which I do expect. And then moving over to that daily chart, you can see the 3 down days. We're right at that daily ATR. So that's 548.76. Did not break that level, did test it. Lowest ATR band sitting all the way down at 537.62. So again, very similar to what we saw in the previous. 535 was that price target in that zone. So 537 right in that same area. You also have the 55 EMA sitting right there at 539.29 on this chart. Big volume over the last 3 trading days. You can see R vol, big spike on that Friday, 1.16. Momentum bearish as you would expect. We haven't seen a change of conditions quite yet, but I do think we're probably going to push towards that lowest ATR band. Just depends on if we get that rally up to a lower high and then we get the bigger down, or if we just go straight down to it. Probably not straight down. We're already a little bit extended in the shorter time frames, but it's not impossible. Moving over to the NASDAQ, you can see it was a much stronger down move, 3.98%. Big move. Trend support sitting at 19,200. And this most recent move was 20,400 all the way down to 19,500. So still expecting more downside. Momentum bearish, RSI bearish, back below the SMA, back below this trend line that I was watching. You can see it here. RSIs have been trending lower slowly. And once again, we're getting a bigger breakdown there. So waiting to see what happens. 21 in EMA sitting all the way down at 18,658. Plenty of room to the downside for another consecutive week if we were to get a week like this. So down to the 21 EMA would be about a 4.5% down move, down to that trend about 1.8%, and then we have a little bit lower trend there at 6.3%. So a couple of weeks of downside potential. Again, looking at an overall of around a 10% potential, very similar to what we saw here, just expecting it to happen a little bit quicker. 2 very small weeks, big down week. But so far we've gotten a big down week and I'm expecting a little bit more here next week. And then moving over to the daily chart here, you can see high, slightly lower high already, big gap down. That was where I lost most of my money this week. Hard to make adjustments for those gap downs. I didn't expect to see such a massive gap, but that is what we got. Down 3% on that day. And then the 2 subsequent days, about 0.5% and almost 1% on Friday. 55 EMA is the current price target, which is 467. Do have some potential zones of support. You can see RSI still has plenty of room. Momentum still bearish. We've been stepping to bearish now for 7 days in a row. So we'll see how that plays. But I do think we're going to hit that 55 EMA. Then we'll see what happens. You could still say this is going to be a midpoint, lower high, maybe rally up to 492 and then get the bigger break. But we'll see how it plays. Certainly some potential scenarios there. Overall, everything still looks bearish in structure. So you can play the short-term bull moves, but overall, we're expecting more downside potential, at least until we hit those medium-term EMAs. Moving over to the Tasty charts, you can see very similar setup. We mentioned it last week, bear candle at the ATR. Then we got the continuation lower, classic topping pattern, broke the 8 EMA, that was at 476.64, closed below that around 475, 21 EMA sitting at 456.46, looking at that zone as an interesting area. You also have the ATR trailing stop, 443.67, again, interesting zone. We'll see what happens once we start to touch those areas. Do expect to see another move down. One more bear week, just like we saw, should push us into that 456 area, and then we'll see what happens. But you could expect even lower moves. On this previous move down, we got close to that first lower ATR, which is down around the 410 area, and then current price on that is down around the 439 area. So if we do see another move down to there, that could be another 10% from here. I don't necessarily think that it's going to be that aggressive, but it's not impossible, and it is something to consider. And then moving over to that daily chart here, you can see we're in bearish conditions already on the NASDAQ. ATR trailing stop 503. 473, expecting to hit at least that 470.62 level. That's your next dynamic support. That is the 55 EMA on this chart. So again, just like we talked about, still expecting to hit that. Similarly to the SPY here, you can also see huge volume down on the 17th, momentum bearish. So everything still says bearish. And then that lowest ATR band, 467.20, which is right in that same region that we talked about. Then you would expect at least somewhat of a bounce from there. And then we could look for those lower lows with that 89 EMA sitting down around that 459 area. So again, that's your potential that we were talking about for that 10% down move into that zone. And then the 144 EMA sitting all the way down at 443.67. So many levels to go. Certainly could hold support, but we'll see how it plays over the coming days. Moving over to the Russell, we did get a positive week, 1.74, but look at that wick. High of the week was 226.64. Up around this trend line. That was the next price target if this trend line broke. Sure enough, we almost got there. Huge volume on the week, 274 million shares. Momentum still bullish. I think this is an initial test. I think we're going to continue higher, retest that zone one more time. This structure continues to hold very bullish. Higher highs, higher lows, and this is a new higher high. I think we're going to get up there. So really no change to the thesis. Looking for a break of this zone here on a closing basis and another push up to that 226, maybe even up to that 229 area. 229.18 is the level I have just behind that trend line. Did touch the 226.02 level, so potentially some sellers in there that we could see. Either way though, still looks bullish to me. And you can see that massive move that we've had over the last 2 weeks. Huge moves, gap and goes, lots of gaps to be filled. And it is worth mentioning on that short time frame, you do have momentum stepping towards the bearish side. You would expect some support to come in that 212 area here. Got those previous highs, got some trend support here. So you would hold that higher low and then you'd look for a push back up into that zone, 229 area. So we'll see how it plays, but I do expect a lower high, a higher low, and a push up. And then moving over to the Tasty charts, you can see we did get huge volume there on this most recent candle. Our vol was 2.3, hit that upper ATR band, 226.89, sold off from there. So again, still expecting to hold the higher low, would expect to push up to that next ATR. So the ATR is going to trend higher a little bit, right into that 229 area. So it does fit with the overall thesis, continuing to grind higher here. Again, you can see similar move, hit the upper ATR, pull back, hold the levels, push to a new high. That's what I'm expecting here. Hold these levels. 208 to 212 makes sense. Push back up to that 229 zone. And then you can see it here on that daily chart. ATR trailing stop sitting at 209.66, right in that zone. 21 EMA also sitting there. Huge volume over those last couple days, so you would expect follow through for sure. It's very uncommon to see our vols this high, this consistent. So lots of buyers in the small caps. We've been talking about them being historically undervalued, and they certainly are. So I would expect buyers to continue to move into this zone. We were just super extended. You can see the high of day there on the 16th was 224.86, and the highest ATR band for that day was 213.95. So very, very extended, super uncommon to see it. And even with this pullback, we're still sitting at that upper ATR band, which is currently 216.98. So pulled back to that level. We'll see what happens here. Probably a little bit more pullback and then more up move after that. Moving over to the Dow, similar thesis, positive on the week, 0.66, big wick to that upper trend here. Huge volume, continues to ramp, momentum still bullish. I would expect more continuation here. Doesn't mean we can't see a little bit of pullback, higher low setup and then a push. Current level 398.76 for support. Maybe these wick highs around 400.73. We'll see what happens there. But overall, still a bullish trend. Nothing really changing here on the Dow. And then you can see that on the daily chart, similar to the Russell. Huge volume. Look at this volume here. Big spike up to that zone. Did get a bit of a rejection, momentum fading a little bit, so could see a little bit more downside. But overall, this is a bullish trend, looking more for a buy than continued selling. Moving over to the equal weighted S&Ps, pretty different story here, basically flat 0.08, but to the downside, we did wick an all-time high here. High of week was 172.38, so big move there. We got the break 2 weeks ago, got the continuation this week, then we gave it all back, so that's a little concerning. 179.76 is the high going back here to the beginning of April. Want to see it get above that and hold. Momentum still says that we could. And looking at that on the daily chart, I just don't want to believe that this is a fake out breakout. It does kind of look like it. Clear break here. Good continuation, good volume on those up candles, but you can see wick, engulfing candle, so maybe you get a little bit more downside here. 167.53 is the level for support. Again, very similar thesis to the Russell and the Dow. Big move up, just extended, expecting for a higher low and then a push higher. Moving over to the SPY Russell and NASDAQ SPY, you can see obviously the Russell has been massively outperforming for the last 2 weeks, but these were very, very high levels on this ratio. So you could argue there was consolidation, expecting a down move. We hit the trend here, so this is a zone where you would expect to find some support, but momentum's bearish, RSI's bearish, so overall I would still expect this to continue lower, which does fit with the thesis of the Russell establishing that higher low, and the NASDAQ and the SPY continuing to fall, and then similarly here NASDAQ SPY hitting this zone of major resistance, a bunch of trend lines consolidating in that zone, broke the 355 level, closed below it, momentum bearish, RSI bearish, so NASDAQ likely to continue to fall. Let's go ahead and extend out this trend line here, which does put some support for this structure down around that 349 area. So again, NASDAQ underperformance, SPY underperformance, Russell expected to continue to outperform over the next 2 to 3 weeks. Moving over to the SPY divided by the M2 money supply. Got a big down week here, obviously, makes sense. But look at the structure, continues here. We were extended, pulled back, just like that 3-week down move that we saw previously. And now we're here, well extended, didn't quite touch the level. So 27.25 was what I was expecting. That would have been up at the upper trend. You can see this trend was weakening, got the big down week, broke the lower bound. 25.91 is your next zone of support, 9 EMA, 25.99. So right in that zone, we'll see what happens there. If that structure breaks, 21 EMA, sitting same thesis there, 25.23 would give you the down move that we were talking about on the previous charts. And then you could extend out this trend line here, sitting right in that same zone. So we'll see how that plays. Below that, you have 24.49, momentum bearish, RSI right at the SMA, just barely broke it on a closing basis. So overall, to me, this says we're going lower. Question is how much lower. It does look very similar to this setup here. You can see consolidation, extension. We haven't really had too much consolidation at this peak, but we did get the big down week. Could see a consolidation here and then the bigger move down. Either way, everything to me says we're getting at least another week to 2 weeks of downside in my opinion. Moving over to the Mag 7 here, you can see we're down 4.32%, right to the level 265.08. Pretty much closed there. We did overthrow it to the low, which was 263.45. So overthrew the level, bounced, holding that level, momentum bearish, RSI bearish. You can see we bounced off that trend line here. Makes sense. We're getting into this trend line here, which also makes sense. That's at 261.20. So potentially a little bit more downside there. And then what we're really looking for is if this structure starts to break down, you got the 55 sitting at 222.88, right around that 230.52 level. So right in this zone would be where you would potentially look for support after that. And then this would be a topping pattern, right? So left shoulder head, right shoulder potentially. And then if we start to see a structural change there, then we're going to be looking for much lower lows here on the Mag 7. Right now, looks like a pullback in an overall uptrend, but watching this zone closely to see if we start to see a change in structure. Moving over to stocks that moved this week, we got Coinbase and MicroStrategy, 18.24%, 14.36% respectively. Massive weeks for both of these stocks. Coinbase has actually had a lot of these weeks where you have big up moves, 26%, another one here, 24%. Quite a few in here where it went from the low in October up to really the December high around 180. That was a huge move, more than doubled during that time period. And really these lows back here were down in the $30 range for Coinbase back in January of 23. And since then we are up in the 268 area. So Coinbase, it's been on an enormous run for sure. And we got another big up week here. 268.73 would be your price target. And then if this starts to break and we look for that upper trend line, that's all the way up around the 440 to 450 area. So I don't really think we're going to see that, but it wouldn't shock me based on some of these massive moves we've seen in Coinbase over the last several years. And then looking at MicroStrategy, you can see big high, big extension, pulled back. You have a low, then you got a higher low. We now have a slightly higher high from this previous high. Looking for that 1782 level to break. You can see that was established here as an interesting area. We're right at that high, looking for this to break to get back to that 2010 level, which is right around the highs here from March. Honestly, that should be a little bit lower. Let's go ahead and lower that down here. Right around 1988, which is the high going back here to the 28 March week of 2024. So right there, looking at that move, which is still about another $200 or so of upside, or a little bit more than 10%. Moving over to Apple and Microsoft, you can see Apple was down 2.7, Microsoft 3.6. Pretty terrible week overall for the Mag 7. Makes sense based on the Mag 7 chart. And you can see we broke this structure here, looking at trend support down around 218. I just can't imagine this is not going to start to move lower. You can see we got that first step towards bearish here on Apple. Would expect more of that. 9 EMA sitting down at 210. Got a a level here to 1155. So could see support here, realistically probably a little bit lower. And then Microsoft, we added a level on these wicks back here from the end of April as well as the beginning of June. Broke the 9 EMA here on the weekly this last week. And we have a support zone around 428.88, and then the 21 EMA sitting there at 426.13. So momentum bearish, RSI bearish. Looks like there's probably a little bit more to the downside. Hit the 21, might see a bounce from there. Maybe we see something like these previous moves where you get a big wick, hit the 21, huge wicks to the low, way overthrow the 21, and then you get a continuation. So maybe we see something like that, throw some wicks down to the 213 area, and then we get a close above the level and some gains from there. Something to watch for, but either way, I do expect to see at least a wick low and some lower lows to come. Moving over to Tesla and NVIDIA, we talked about the inside candle that we got on the weekly chart. Expected more downside, did get it. 3.64% to the downside, expecting for more moves. 232.57 is the level. 200 SMA sitting there as well, so could find support in the zone. Realistically, probably looking for a little bit more downside. Haven't seen momentum break yet. RSI still very extended above that SMA, so pull back to the SMA. Hopefully hold that level and then see another push higher. And then NVIDIA, 8.75% to the downside. They were a participation in that down move triggered by President Trump's comments about Taiwan. So that was not great for them. VWAP sitting down 108.66. We've been watching this 111 to 113 area for a while, looking for the gap fill on that move. That's also right around the 55 EMA on the daily chart. We've been talking about that for a while. But look at this momentum, continues to fade. RSI, big breakdown. Trend support down around 108. I have a level 106. Just can't imagine we're going to see any kind of bullish structure until we get into that zone. Absolutely could hit this zone, find some support, and then continue higher. Possible. We've seen moves like this, just like back here in March where we got up to 94.50, pulled all the way back to 76, and then pushed all the way up to 140, which was about a 100% move there. So we've seen NVIDIA do this before. I do think there's more downside in the short term, but that doesn't mean that there's not more long-term bullishness to be had. Moving over to Meta and Amazon, you can see Meta down 4.43, Amazon down 5.8. Both of these look pretty terrible. Meta looks a little bit worse. You could argue high, lower high. It's breaking down, finding some support in that highly traded zone around 469. Didn't touch the level yet, 454.07. Honestly, I expect to touch there. I think this is just an initial reaction. Momentum bearish, volume ramping, RSI bearish. I think there's more downside to be had here. It's more similar to this previous move. Two bear candles. Huge one here, 7% down. And I would expect something like that. Potentially push towards that 427 area. It's not impossible. And then looking at Amazon, this looks a little bit better. Not much, but a little. You got a high, higher high. We were within this structure. That's since broken down. Took it out here, tested that level. 21 EMA, still right around there, 183.63. Held the level, 181.41. So that's the zone you're looking for. If it's going to hold, it needs to really do it there. Otherwise, we're headed down to 174.23. Momentum bearish, RSI bearish, volume ramping. Probably not likely to hold, to be honest. Probably headed down to 174.23. Moving over to staples and discretionaries, we got staples up 0.83, broke the level 77.50. You can see that big wick rejection here from the previous high, but realistically, I think we're still headed that 79.90 area. And then looking at discretionaries, down 1.82, so we're getting definite reversal, moving out of those growth stocks into these safer stocks that are going to benefit a little bit more from those lower interest rates. Momentum stepping to bearish, RSI stepping down, probably headed towards the SMA on RSI. Not huge volume, but it did engulf the previous. Support would be 185.36. We talked about this zone being resistance. Did have a massive run to get there, probably going to break down a little bit more, maybe even down to that 180.10 level. 21 EMA also still sitting there. So over the medium term, probably a little bit more downside. Over the longer term, I would guess that we'll catch a higher low and push to another higher high. Moving over to financials and oil and gas, I've been watching these sectors pretty closely over the last couple of weeks. Financials up 1.11, still above that 42.22 level. This was an all-time high, did get a decent rejection there, which is interesting, but momentum still swinging to bullish, still decent volume. Overall, you would still expect this to continue higher over time. And then oil and gas, we did get an up week, 0.33, but the high of the week was all the way up at 151.50 or so, and then we pulled back right to the level 140. 145.92. I liked this zone on the push up, and I do think we're probably going to continue higher from here, but that big wick rejection, it has me a little bit hesitant. Momentum swinging to bullish, RSI below the SMA, could reject off there. Volume decent, seems to be ramping off of this push of that 55 EMA on the weekly chart. So overall, I still like oil and gas here, but just being a little bit more cautious. It looked better at the end of last week than it does this week. Moving over to oil and gold here, we got oil down 4.34, so that's not great. Broke the trend, broke the level. 200 SMA, hopefully that holds down around 77.07. This is part of why I was hesitant on oil and gas stocks. I still like them. I still think they're going to hold up better, but really needs to hold this level here. Test that highly traded zone, test the 200, touch that level, and then push higher. And then you're in a little bit of a consolidation, right? So you have a low, higher low with a high, lower high. So you're in this choppy price action. We'll see what happens there. And then look at gold. Huge wick. High of the week, 229.65. Way overshot the all-time high. Way overshot the price target. We'd been watching it hold here, looking for a push to that next resistance. Broke the resistance. Momentum still okay. RSI not great. Probably going to see another test of that 214.65 area. We'll see what happens. But short term, bearish. Medium to long term, still bullish. Moving over to RIOT and Marathon. Both of these had a great week. 22.69 and 19.07%. Even with the wick rejections that we saw in the middle of the week. We're in a zone of resistance here on RIOT. We hit the 55 EMA. That's what we were looking for around that 11 to 12 area. High of the week was 1309. Price target 1411, 1418. Needs to break the zone. Think it could do it. Maybe candle break here. Momentum, it's okay. Volume, good. RSI bullish. And then looking at Marathon, similarly, hit the trend almost. Looked like a bit of a rejection then from there. But overall, momentum bullish, RSI bullish, volume bullish. I still think we're probably going to see another swing. And if this structure breaks, we could see some wicks up to this maybe 31 to 33 area between these two wicks up here. I think makes sense as a zone of resistance and a potential next price target if we can continue this run. Moving over to breadth, both of these had bearish weeks, 14.25 and 6.96 to the downside. Inside candle here for 200-day breadth, so that's not great. Held the level 68.14. Honestly, you would expect to push back down to the 55 area, so short-term bearish still. Momentum still okay, so it could hold the level. We didn't test the next one at 86.50, which is concerning. Maybe you just get a big up week, slight pullback, push to that level, and then we'll see what happens. Certainly possible, but I just don't like it as much, especially with the way that markets are looking. And then looking at 50-day, similarly, high, lower high. Looks like we're getting another lower high here. Momentum, again, still bullish. RSI, still potential for support there at the SMA. Could hold the level 62.25. Also have all the SMAs here around that 56 area. So again, in theory, could swing up, but I would be patient on both of these. Moving over to 200-day breadth. Pretty different story, to be honest. Slightly more positive, 0.55, not a lot. You can see the high of the week was all the way up at 80.32. And that was actually a gap up and then fell. So that's interesting as well here on 200-day breadth. Momentum, swing into bullish. RSI looks a little better. Still a series of lower highs, just not great. You also have a high, lower high here. You could argue maybe double top between these two. Coming off of that 55 EMA, so maybe we get a little bit more consolidation. Buck the trend a little bit. I was expecting a little bit more of a lower high potentially around that 76 area. Didn't quite work out that way. So overall, 200-day breadth actually looks a little bit better than 20 and 50-day with a slight break in that structure with a double top versus a lower high setup. Moving over to the dollar here on the weekly chart. This still looks weak to me. So you got a high, lower high. We got a low, slightly lower low. Looks like we're potentially rallying up here, maybe into that 105 area. Retest the trend and then get more breakdown. Momentum still bearish, RSI still bearish. Maybe look for a slight rally up to that SMA, which is at 54.63. So we'll see how that plays. Short term, a little bit more bullish with that wick rejection at the level, but potentially a little bit more bearishness, in my opinion, over the medium term. And you can really see that structure. High, higher high, low, lower low. It seems like we're starting to see a bit of a change in structure. And then we could head down towards that 102 area, back in the same zone that we saw back here in December. Moving over to bonds, 2 and 10-year bonds. I think yields are probably going to catch a little bit of a bounce here. So 2-year, it's fallen a lot. It's got a slightly bullish day, got a slightly bullish week, held the 4.5 level, broke it the previous week. Then this week we held it. Maybe you see a little bit of a pullback, maybe up into the 4.6 area. And then we get the FOMC in 2 weeks, so probably going to go lower after that. And then 10-year, same thesis, down candles, inside candle, momentum, still bearish on both of these. RSI still bearish on both of these, so certainly could rally up and then get that lower high, and then we'll see what happens. Overall thesis, still bearish. Short term, probably a little bit bullish. Moving over to 20 and 50 day. Moving over to JNK and TLT, you can see JNK slightly negative, wick rejection from this area, hit the level, rejected from there. Momentum still bullish, so I still think we're probably going to see higher highs. Could see a rejection from here next week, establish that higher low, and then see the push. Similarly here on TLT, just can't seem to break that 55 EMA on the weekly chart, so that's where we're finding resistance now. Been struggling with that. I still like this structure. You could argue maybe this is a down move, bear flag, looking for a bigger down move, so that's a potential setup. But this does look a little bit better to me than it had recently. Maybe we find some strength down around that 89 area if we get the break. More consolidation. I don't think we're going to see lower lows to come. Momentum bearish, RSI. Short-term bearish, but potentially could hold the SMA. So overall, still bullish on bonds, medium to long term. Short term, I think we might see 1 or 2 more weeks of pullback. Moving over to volatility, VIX, huge jump, 32%. Broke the level, headed to the next one, in my opinion, 18.5. And then above that, you got the 144 and the 200 SMA sitting around that 20 area. So I think we're probably going to get there. Is it going to be a straight line? Hard to tell. But when you hold on these levels, momentum bullish, RSI bullish, looks like you probably have a couple more weeks there. Usually once you get into bullish, you get a little bit more bullish. So 1 to 2 more weeks. So fits again with that overall thesis. 1850 and then maybe that 20 zone. Maybe if it's feeling real froggy, we can get up towards these peaks back here around 2250, but hard to say. At least short-term bullish, and then we'll see what happens from there. Moving over to my accounts, I was fortunate. I did lose less than 1%, closer to 0.9% on the week, which is good. I generally compare directly off of the NASDAQ, which was down almost 4%. So you like to see it. That was good. I also outperformed 2 weeks ago, so again, that helped a little bit. Right around that $140,000 mark, I think I lost around $1,400 or $1,500. You'll see it on the thumbnail. But either way, positions going into Monday, 100 shares sold the 217s for about $1, and you can see here on the Qs, still in my bearish position here, 2 puts, 2 calls, protection on the call side with about $1.50 credit on each of those for the Tuesday session. Then I have a 473 and a 474 put for the Monday session. So both out of the money, still big credits on both of those. Need to be extra careful this week. You do have tons and tons of earnings, and I just can't imagine that the earnings are going to be strong enough to maintain the current valuations, especially with some of the earnings that we've seen so far. So big tech, I think, is going to be under pressure, so more bearish for the NASDAQ, but still bullish overall on the small caps. I think we're going to see a higher low and a push either into the end of the week or next week. Let me know down in the comment section what you think of BlackRock and their trades for the rest of 2024. AI, I think, is the obvious one. We've been watching that for a while. But what do you think about infrastructure and healthcare? Is that a good place to be? Healthcare has been jumping with their GLP-1s, but as they look towards that baby boomer demographic, end of life care, is there an opportunity to invest in that period of time? Definitely let me know down in the comment section. And if you got any value out of this video, make sure you hit the like and subscribe to help out the channel. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.